APAC Equity Daily Wrap, September 23, 2024. Asian markets held steady on Monday, with share prices rising slightly for most of the day until the US dollar strengthened in the late afternoon. Passive money and quant funds were active on the buy side, while long-only investors were more inclined to sell. Notable buying flows were seen in Indian financials, while Korean memory stocks get sold off by foreigners again. There was little single-stock news today, but on the macro front, China's fiscal data worsened in August, with a decline in broad budget expenditures. The lack of government support raised concerns again, particularly after PBOC opted not to cut the loan prime rate last Friday. This morning, PBOC and Chinese financial regulators announced a press conference at 9 a.m. Beijing time tomorrow, ahead of the local market open. Shortly after it, PBOC lowered the 14-day reverse repo rate by 10 basis points, reigniting investor hopes for easing or stimulus to boost the economy again. The Chinese yuan briefly touched 7.04. However, I believe the chance of significant stimulus is low, as the Ministry of Finance is not involved, limiting the potential for a fiscal response. Additionally, the press conference is titled High-Quality Development, suggesting that central bank easing is unlikely. Today's reverse repo rate cut is likely a temporary measure only, to provide liquidity ahead of the quarter end, and the upcoming 7-day national holiday in early October. China's economy plays a crucial role in global markets, and I agree that it could either weaken global demand, or trigger a substantial short squeeze in undervalued Chinese assets if domestic policies shift. However, with limited visibility on China's policy direction, I believe Asian assets will be more influenced by U.S. macro factors in the near term. Tonight, U.S. Fed members Bostic and Goolsbee are scheduled to speak on the economic outlook. Let's see what unfolds.